Let me bring on board Gautam Shah and figure out what he's observing on the charts. Gautam, hi, good morning. Good to have you on the show. Gautam, it's definitely some recovery inside, but I don't know how sustainable it is because there's just so many moving parts, especially with, the news flow around Ukraine and Russia. But having said that, we've made it back to 17,100. What's the chart indication like? Do you think it's going to stay? Is the worst behind us? Or would you say it's pretty much a work in progress, each day as it passes?
Good morning. Well, I guess at some point of time, this correction of the last 5 months had to happen because I think we were all used to seeing the markets witness a shallow correction and come back. And that's something which happened every single time since the Nifty started to rally from the March 2020 lows. But I think in October, November last year, since the time we topped out at 18,600, the news flow has not helped. And let's not forget, the US markets are the big daddy. When they are volatile, when they are weak, India and the rest of the world, just gets into a bit of a shell. And that's exactly what has happened in the last 3 months. Any which way, I think the market was a little top heavy, and that's probably the reason you're seeing this correction. But to be honest, the headline indices do not depict the kind of damage that has actually happened beneath the surface. If you really look at the NSE 500 or the entire NSE basket, on an average, the drawdown is about 30-32%, which is very large by historical standards. So I just feel that for the short term, the fall is pretty much done with. 16,850 was and remains a very important support level. That's the number from where the Nifty has reversed yesterday as well. And today we are seeing a rally led by good breadth, as you rightly highlighted. So I do believe that there could be some stability over the next 3 to 4 trading sessions. The news flow around the Russia-Ukraine conflict is now pretty much discounted. You can't hit the market every day with the same news flow. So I would want to believe that the Nifty gets into a range, 16,850 on the downside, 17,500 on the upside. And if you actually look at the breadth readings, we are at historically oversold levels. So these are levels from where investors should definitely look at buying opportunities. I know for traders, it's a nightmarish market currently because you are seeing major gap ups and gap downs. But for investors, with a 12-month, 18-month, 24-month horizon, this is a very good time for risk-reward based buying in many of the sectors.
So let's pick up these stocks and sectors one by one, Gautam. And let's start with banks, given that they are the ones which have sort of managed to withstand the recent correction a little better than other sectors, perhaps. And, clearly given its large bearing on the markets and how large the sector is. What's your reading on the charts of the Nifty Bank? Or do you think, that relative outperformance is here to stay vis-a-vis the other sectors?
But it's actually single-handedly bailed out the market, to be honest, because, at yesterday morning, Nifty was at a 5-month, 6-month low, and the bank Nifty was still 10% away from its recent low. If I'm not wrong, it was around 34,000. So it just tells you that that banks have got into outperformance mode after having underperformed the whole of last year. So I think this outperformance anyway was coming, and I think the bank Nifty chart is excellent. Until the bank Nifty stays above 36,500, I want to believe that it will eventually lead the recovery, take the bank Nifty towards levels of 39,500. And once the breakout past that number happens, I think you're going to see greater upside. And in general, if you look at the large caps, they have been quite steady in the last 10 to 15 days while the market has gone through these very volatile times, the Reliances, the L&Ts, ICICI Banks, the HDFC Banks of the world. So the large caps have not been impacted as much, in comparison to the mid caps and the small caps. But coming back to the banks, I think we like it. I think this is a place where you should be overweight. Some of the top names like ICICI Bank, State Bank, HDFC Bank, which is looking good after many, many months, I think they're all setting up for good upside, and therefore one should be topped up into them.
Gautam, interestingly, it's even within banks, it's not been an across-the-board move. You've seen underperformance from an HDFC Bank, and Axis and IndusInd have been in a completely different trajectory, and then SBI and ICICI Bank in a different orbit altogether. Within banks, where is it that you see outperformance coming in? Or do you think that it's going to be across the board?
See, we like to use ratio charts. We like to use relative strength charts because it gives us a clarity as to where the alpha is being generated. And it's very clear that in the last 1 year, the outperformance has been in ICICI and State Bank, two stocks which have been in our model portfolio all along. We continue to like both these names, and we feel that it's going to lead the Bank Nifty higher from current levels. IndusInd, does its own thing. We don't see any structural story there. Kotak is basically in a very large range. It's more of a trading stock. It's more like an insurance stock in difficult times. And HDFC Bank, I think, is the key stock to watch over the next 3 months, because this one stock has such a big bearing on the Nifty and the Bank Nifty that if it underperforms, it pulls the entire market down with it. But with what HDFC Bank has done in the last 15 days, I'm tempted to believe that the selling pressure could now be done with, because the stock is not making new lows anymore. And I'm more likely to believe that it is going to start a new uptrend from here. So iBank, SBI and HDFC Bank would be my top picks in the sector.
Gautam, hi there. Good morning. Avan joining in and just taking a look at the sectoral trends and the outlook. You believe that metals is also a buying opportunity right now, and auto as a sector is an outperformer with limited downside. Take us through some important levels that you're looking at on these indices and where you're finding opportunity by way of names.
See, Avan, we are currently looking at sectors and stocks which have gone through long periods of consolidation. If you look at metals, for 5-6 months, it's been in a range. You look at auto index, it's been in a range for the last 4 months. They have handled the bad times really, really well. If you look at, banks, autos and metals, and I'm tempted to believe that a breakout is coming on the upside very soon for both these sectors. So autos obviously is right on top of our list. I think the index is likely to take out the recent high of 12,000 and then move substantially higher. So Tata Motors, Maruti, Bajaj Auto, excellent setups, and I think they will give you supernormal returns over the next many months. This is followed by metals, where I think where the weakness is a little overdone. It's looking very, very oversold, and at current levels, I don't think there is much to lose in a Tata Steel or a JSW or a JSPL, or even a Hindalco and a Nalco. So I think there are excellent opportunities and a very good place to hide, because they have institutional interest, great fundamentals, coming out of consolidation, risk reward is excellent. So I think in a choppy market like we are right now, I think both these spaces, the kind of targets that I've given, 10 to 15% upside is entirely possible.
Right, Gautam. Appreciate you flagging off a lot of stocks that our investors can watch out for. On that note, we'll slip into a quick break. Thanks so much for joining in.